It's Sunday the 18th of March 2018. I wanted to do a few updates on some stocks that I hold in my portfolio and divided that up into a few videos so people can sort of select the ones that they're interested in. One of those, a few of the companies I'm interested in are in the gold development plays, and I've talked about this in a video back in January, so I thought I'd follow up on the same names. So one of those was Cardinal Resources, which is has a large resource in northern Ghana, and they've had a couple of important announcements in the last 2 months. So obviously that's been a fairly tumultuous period last couple of years. If you go back and have a look at some of the videos, I've been following this since early 2016, and it held it all the way up to the top, and then held it on the way back down, and then sort of got a bit indecisive in the middle here, and gradually reevaluated my position. I've been adding to it in below this sort of 50 cent range. So they came out with a increased resource a few weeks ago. So they came out with a scoping study first, actually, which is a preliminary economic assessment they call them on the Canadian market usually, and that showed some really good results. So I'd been looking in the previous video. I said I was looking for sort of 700 to 750 all-in costs, and that's sort of in the area we've got. You can see on the really high production case, they've got $700 US cost, which is sort of a key number. That's sort of the lowest quartile production, I think. I'm getting toward that area, and something that a lot of bigger companies are probably looking at as a bit of a key sort of area of costs that they're trying to maintain in their current portfolio, and they want to have projects to replace those in the future. So that's a really good set of numbers, good internal rate of return on the project. So after they released those PEA numbers, they went to increase their mineral resource to 6.5 million ounces, which is sort of, I think, a 50% increase in the indicated category. So you'd think that they'd be on the basis of a 6.5 million ounce resource, and that's purely indicated. There's some inferred there as well. They'd probably be looking at these higher production case numbers, and even then, I mean, this is they only got life of mine production 3.5 million ounces based on it previously. So when they've got the updated mineral resource, you're probably looking at a life of mine production getting closer to 5 million ounces on a reserve basis. And that's I think Namdini's getting fairly well defined now and pretty well understood. So the stock didn't react too much to either of those announcements. I think the story is probably well understood now, and it needs to generate some new interest. There is some drilling happening on some of their other prospects nearby, where they've seemed to have some reasonable chances, I think, and of finding something in addition, which would be, that would be a major catalyst if they could find another Namdini style deposit. But that's sort of dreamy stuff at this point. But stock's sort of still struggling to get it back above this 58 level, which I think might have been a previous sort of capital raising level, but it's clearly acting as a bit of a resistance zone now. And it's you can see here, even on the down days, though, it's incredibly little volume, though. It didn't trade over 100,000 shares in the last week on a daily basis. So it's still pretty strong, not a lot of liquidity. They've still got a reasonable amount of money in the bank, so I don't think there's a capital raising coming anytime soon. In the next, say, 6 to 12, or maybe 6 months, I can't see a capital raise. Maybe in 12 months, there's something coming. They'd probably around the PFS, they'd start to, with the PFS, they'll have to release a mineral reserve as well. So I think they've done a lot of the work for the PFS, and that should be, I think, in the next 6 months, they're planning on releasing that. So if that comes along with an even better set of numbers and generates a bit more interest with the exploration, we might see a bit more. Hopefully the stock starts to liven up a little bit as well, because at the moment it's really sort of in a bit of a lull. So some of the others that I've been following, West African Resources, the other one where I've got a large holding. That's similar sort of problems. They're struggling to generate a lot more interest at the moment. The stock's sort of broken this sort of uptrend line. Not that that's a major. I mean, the technicals are probably not a big deal in this sort of stock. Previously, I think when I recorded the last video, it was testing this high 44, which would be sort of a breakout zone. Failed there, and it's sort of drifted back down. But again, volume is pretty minimal. You can see the average volume figures are are relatively low. This doesn't include some of the big block trades that had happened in maybe in about 2 or 3 weeks ago. So I'm not, those shares might be leaking out into the market about they were traded around 40 cents. Macquarie exited its stake of about 6% of West African. I don't hold any. I don't think that's a death knell for the stock or anything. Macquarie had financed the stock down, I think in about 2015 or 2016 they got some cheap options, and then when West African hit the high grade section at the M1 deposit, Macquarie have just ridden that up and have exercised those options and are now cashed out the shares for a tidy $10 million profit or whatever it was. So I don't think that's a major deal, but obviously the real catalyst for this stock will be the updated definitive feasibility study that should be coming out by June. They've been releasing a few more drill results. This one was mainly about the M5 deposit, which is sort of an adjacent deposit to the M5 underground anyway, is adjacent to M1 and has some really good sort of deeper. So this was M1. They've still got a visible gold show, and they haven't reported this drill hole, but looks like it's about 50 meters below the sort of lowest level that they've had so far. So that would be important in adding to the depth of the M1 deposit. So it looks like there's with visible gold shows the mineralization is still looking like it'll be there. So that could extend the ounces by another 50 to 100,000 ounces potentially. So that M1 doesn't look like it's ending anytime soon. M5, the grade's not as high, but there's still some good potential for a higher grade. Being next to M1, it looks like it might go deeper. So it's really the catalyst is going to be that definitive feasibility study, and because I don't think the market has fully grasped how good that could be relative to some of these other mines that are operating and others that are in development phase. So I'm still holding here, even though I've been buying back in around this sort of 37.5, adding to my position, and I don't see massive downside, and I think that definitive feasibility study will deliver. But that's just my assessment based on the drilling and the other projects. So some of the others, DCN Gold has had a pretty good run last couple of weeks. I added to my position on this down day here when it dipped below this previous, which I thought would act as a bit of a support zone. This one does tend to obey the levels pretty well, the support and resistance levels. So it's held up at this 320 a couple of times now, or 318 I think it peaked at again. So when it dipped below there, I thought that it was a good opportunity to buy back some stock that I'd sold up at the sort of $3 level. So I bought back in at around 260 for some more, and it looks like it wants to go higher again. Sort of high flag here, sort of having another go at that level, and I reckon we're probably due for in the next 3 weeks. I'd imagine there'll probably be like a first gold pour announcement based on some of the timelines they've said previously. I think they said end of March they were looking at first production. So this is that might act as a little bit of a catalyst, maybe not, but I think if they can show that they're producing at those high levels, there's a bit of an appetite for these large Australian gold production stories at the moment. Like Northern Star, St Barbara, Evolution, Regis are all at I think they're all near 52-week highs. So I think, and Dacian sort of in that category, or at least I think it's viewed by the market as being in that category. So I think if that risk portion is removed, if they can show that they're producing at the feasibility study numbers, I reckon it might go up and test the previous highs. So I'm waiting for that push. High volume here on Friday. I don't think that was related. The GDXJ rebalance was on Friday. I don't think Dacian was added. So I think this is probably related to an ASX 200, ASX 300 type rebalancing. It may have been upweighted considerably in the ASX 300, for example, so they had to buy a few shares. So that's I think it's going to do pretty well once those first gold production numbers start coming in. But still a little bit of risk on the table, but I think it'll probably break through that resistance zone in the next month as production starts. The other one, Gascoyne Resources, not quite in the same league as those other three, but just in the last couple of weeks has had some pretty good chart action. Good consistent volume coming in last week, sort of, million shares traded each day. And that's, as I said previously, it's got a resistance zone around this 52 cent level created by the capital raising they did to finance the mine last year. So I think if that can break, I think they're due for first gold pour in probably the next 6 to 8 weeks. So when that comes out, I reckon you could still see some upside here. Probably maybe heading toward that sort of 65 cent level is very feasible, I think. It's been just range trading now for almost 2 years. But I think it's really starting to see some more solid accumulation and maybe some institutional buying as well ahead of this has been a pattern. The institutions tend to wait till risk has sort of come off and any construction risk is out of the way, which Gascoyne seems to have had a pretty smooth construction of their project. It's not as certain to me that the early numbers are going to be as good from Gascoyne. So, I might look at taking some off the table if it made that run ahead of production. But it's still looking like a reasonable story to me. And Australian dollar gold up over 1,700 again on Friday night. So I think they'll be pumping out good money. And that's still another one I'm holding in my portfolio. And if it might be looking to buy a few more on a dip if it came back toward that sort of 45 cent level. I think it's a lot of the risk is now removed from the stock, and a lot of construction risk anyway. But production risk is still an issue. They have got pretty high stripping ratios in the first 6 to 12 months of production, I think. So maybe that's an issue, and they have some higher costs. But so I'd be looking to, but I think it'll probably run ahead of first gold pour as well. So they're 4 stories that I'm following still, and pretty large holdings in each of those as a proportion of my overall portfolio. But I still think there's a lot of value in this gold development space. Especially with some of the production, the large producers are now looking pretty fully valued, and so I think money will start to look at these other names as well as potential good gold stories to follow.